Yo, welcome. Thank you guys so much for joining the video. Today's August 22nd, 2024. And today's video is going to be over the trade recap and basically just a breakdown of what happened during the markets today. And let's get right into it. All right, so first things first, I do want to go over the economic calendar with you guys to see what we have for today. So we have Thursday here. We had unemployment claims at 8:30. We had flash manufacturing PMI, flash services PMI, and I am not too sure what this Jackson Hole symposium is, but watching the ICT stream today, he was talking about how this week tends to be a very choppy week. It's just going to be it's going to invite very low probability conditions where it takes out both sides of the board like continuously, or not continuously, but just very often. So if you guys take a look about what happened yesterday, swing low gets taken, swing high gets taken, swing low. It was going back and forth, so extremely choppy. Even the day before here on Tuesday, very choppy price action, and even coming into Monday as well. It's not like the moves that you want to be part of are like these types of moves here, where it's just one sided. But yeah, it's just that's what I picked up from today's stream from ICT, was that during the week of Jackson Hole's whatever this news thing is, prices tends to be a little bit more fickle and just overall more choppy. So trade intraday models, there's no need for you to be trying to grab 500 handles from the markets or anything like that. Just trade the lower time frame models, trade the lower time frame objectives, and yeah, you'll be fine. So going to the actual technical analysis here, so before we had this massive, dump lower, this was where we were at 9 o'clock. So we were steadily going up, right? On coming into Monday, Tuesday, we kind of just, it was kind of like a consolidation day. And then Wednesday and Thursday here, or Wednesday coming into Thursday morning, it was a very slow grind up. Notice how this move here isn't as energetic as a move like this. Like, this is very energetic price action. This is very one-sided action right here, where the moves are just a straight up move. However, coming into today, I was noticing, okay, well, prices doesn't seem to have the willingness to continue higher here. Shown here on the daily chart, we had this down close candle here on I believe it was Tuesday, and I was anticipating for us to retrace back inside this daily fair value gap here on Wednesday's price action. However, we didn't get that, and we kind of just priced higher. So coming to today, I didn't really have too much of a bias. We took out previous day high before the New York AM session opened, so that kind of already led me to believe, okay, well, we just took out daily objective. What can we do from here now? So like I said, I'm just going to be trading intraday models from here, and yeah, I was just waiting patiently to see if prices wants to show its hand, if it's going to continue higher or lower. So I let prices do its thing. I'm watching, and then we get this massive move down here. Well, we had this massive, I wouldn't say massive, but we took out previous day high, and then we started to retrace back inside this range. Here, all I thought was, okay, we're probably just going to retrace back inside this range, and maybe take out, London lows, Asia's lows, and maybe even previous day New York PM session lows. So I would note out New York PM session low here for you guys. Oops. New York. So that's the New York PM session low from yesterday, right? And now this is when I'm like, okay, well, we just started to, show its hand. We started to continue lower here on NQ. Let's see if we can get a entry pattern or some sort of a model to, ride this wave of bearish, movement down, right? So like I said, we took out previous day high. We started to retrace back inside this range. And here I wasn't given any model yet, but the model that was given to me here was actually here. So I want to show you guys some of the things that I took from ICT. So I didn't actually trade today. I was actually watching ICT stream, and we had a gap up today, right? On the RTH gap, regular trading hours, you guys can just, there's like a little switch for it here. Turn on regular trading hours and you guys will be able to see the gap. So we actually gapped up from yesterday's close. So usually prices will either, if we're bullish, we will respect the consequent encroachment of this RTH gap and trade higher, or we leave this RTH gap, unfilled. But in this case, we actually rebalanced it, so we filled it in. And look at this 15-minute candle here. Look at this 15-minute candle here. Look at how whenever we rebalanced this RTH gap, we came back inside it again, and we instantly displaced the lower, or we showed bearish price action away from it. So this to me was already giving it away. Like, okay, we're probably going to continue lower here. So I go back to electronic trading hours, and then now I'm thinking, okay, well, we just had that, bearish reaction to that RTH gap low, and based on how we closed on this 30-minute candle here, based on how we close here on this 30-minute candle, I can anticipate for this 30-minute candle's low to be taken. And one of the confluences for this trade is that we had time frame alignment. So we had time frame alignment between the 30-minute and the 1 hour. Both those time frames are telling me that, hey, we're bullish right now, or sorry, we're bearish right now, and we want to take out the lows. And I'll show you guys on the 1 minute, but I actually mark out the 30-minute and 1 hour low. So we're bearish on the 30-minute and 1 hour, right? However, this 15-minute candle here, this one, we don't have that bearish of a closure. It's kind of like a people would call it a doji candle. So based on how this candle closed here, I'm not entirely too convinced that we're going to continue lower just yet. So even though we're anticipating lower prices on the 30-minute and 1 hour time frame, on the 15-minute time frame, it's telling me or suggesting to me that we're not continuing lower just yet. So now is not the right time. So I wait and see the next 15-minute candle, right? And my model here was actually based off of this 15-minute candle. And like I said, this 15-minute candle, we reacted to the low end of the RTH gap here. Let me bring it back. We reacted to the low end of the RTH gap, and we had a bearish reaction to it. And whenever I say bearish reaction, I just mean a bearish power of 3. Like, based on this 15-minute candle's closure right here, what can we anticipate? We can anticipate for us to take out this 15-minute candle's low, right? Well, that's basically what's going in my head, like, during that time. So, whoops. So like I said, the 30-minute and 1 hour were bearish, but based on how this 15-minute candle closed, we weren't bearish just yet. So I waited, and then after we got that 15-minute bearish power of 3, now is the time when I would go onto the lower time frames to find some sort of entry model or entry pattern to get into my model or get into that trade. So the trade or the pattern I guess I took my entry off of was actually this 2-minute fair value gap. So this 2-minute fair value gap, supports the idea of lower prices because it is a BISI, a sorry, not a BISI, a SIBI, a sell side imbalance, buy side inefficiency. SIBIs are just aligned. Just think about SIBIs are basically bearish. BISIs are bullish. So I enter my trade here based off of this 2-minute fair value gap, and I want to take I want to note something out here too. So we have a high, we created a low, we created a higher high, and then we created a lower low. Once we come back into the last down close candle right here, what can we anticipate that last down close candle to be? A breaker. A breaker is essentially it's like a pattern, almost like a head and shoulders, but it's something that's ICT. I don't know if he created it or he just. Well, I'm just gonna say he created it. He created it, and yeah. So there's a breaker pattern that's aligned with the fair value gap. That's one of the strongest algorithmic patterns there is, according to ICT. I don't trade based off breakers or like order blocks or anything like that. I'm simply a fair value gap guy. That's my PD array of choice. So I entered off of the fair value gap, but like I said, I don't use breakers, but I do use them in confluence with my trades. So let's just say there wasn't a 2-minute fair value gap here. Would I have entered on this breaker? No, I wouldn't have entered on this breaker. Even though I know even though there's a draw liquidity that I do have in mind, the idea that an entry pattern isn't present, that scratches the whole trade idea in itself. So on the 1-minute time frame, you guys can see a little bit clearer, but I note out the 30-minute and 1-hour low and that 15-minute low. So now the 15-minute is aligned with the 30-minute and the 1 hour. Before, like I said, the 30-minute and the 1 hour were bearish, right? Now the 15-minute is also bearish. So that means there's time frame alignment with us now. Because all three of those time frames are bearish. So we open up at 1:15, right? The next 15-minute candle. We open up, we retrace back inside this 2-minute fair value gap. So I take my entry right there at the 2-minute fair value gap, and then we displaced, lower. So it was, I was barely in drawdown this trade. And I want to point out look at how prices retraces back above this 11 o'clock opening price. If you think power of 3 in terms of only the midnight open, you're going to miss a lot of trade setups because you're trading basically the daily candle power of 3. But if you trade with the idea of power of 3 how prices are fractal and how you can apply the opening price to every single candle, and buying below a hourly open or selling above a 4-hour open, you have to understand that prices is fractal. And it's not just me that's saying prices is fractal. Our teacher ICT says that too. So I just want to note that I am selling above the clock, 11 o'clock open and the 11:15 open. I failed to notice when I was in this trade, but we were actually selling above the midnight open as well. So this is actually in confluence with the higher time frame. This here, this line that I'm about to draw on the chart is actually the midnight opening price. And look at how prices reacts to that price window. So prices trades above the midnight opening price and we instantly dump lower. But I'm not trying to tell you guys that you always have to sell above the opening price. You have to use it in confluence with the trade model and the trade setup itself. So like I said, going over this entire trade already, I already had, all my confluences, all my, I had my entry pattern already noted out. I had my objective in mind, and us selling above that midnight opening price was just like the cherry on top. It was actually like, this is an A plus setup in my opinion, or yeah, this is like exactly what I would want to look for in a trade. So we take out the 15-minute low, and here once we take out this 15-minute low, I would have moved my stops to break even, move my stops here, and I just let the trade run on its own. We take out that 30-minute and that hourly low, so that's more take profits taken right there. I set up standard deviations from the swing leg into that 2-minute fair value gap. So from high to swing low, I take the standard deviation, and I want to point out how the -1 standard deviation aligns with the New York PM, the previous day New York PM session low, and I do want to note that the -2 standard deviation aligns with this new day opening gap. So what I'm trying to get at here is, whenever you set up standard deviations, your standard deviations are more likely to be taken when they are aligned with like existing sell side or buy side levels already, or maybe a gap, like a new day opening gap. And yeah, that's just one of the tips I would want to give you guys. But yeah, that's probably gonna be all for today's trade recap. Like I said, this is A plus setup. I would have taken this every single time. Higher time frame is aligned with the lower time frame. We have time frame alignment. We have the understanding of power of 3. We know why we created that power of 3, and understanding objectives as well. So there's a lot of people trading now that whenever they short, they don't understand what objective is. They short and they're targeting previous day low every single time, maybe, or they short and they target previous week's low. That you have to understand objective. Like, every time frame has objectives, and if you're trading on the 1-minute model or the 1-minute time frame, targeting a weekly objective, that there's no correlation there. Like, even though prices is fractal, you have to understand that 1-minute structure doesn't how can I word this without 1-minute structure doesn't support the idea for a weekly objective. I mean, you can align weekly objective maybe with a 4-hour structure, maybe 6-hour structure, but like I said, you shouldn't be shooting for, like, this sounds basically against everything that you've heard. Like, you shoot for the stars here, but you don't want to shoot for an unreachable target. You have to understand that the markets, there's a flow and tandem to the markets, and you want to be alongside with the markets and not wishing upon such a great, whenever you're shooting for like 1,000 handles, you're basically just wishing and you're just having wishful thoughts. But as long as you understand what the objective is here, then you'll be fine. That's just what I was trying to get at, because like in this trade here, like, this is where we were at, right? Here, this is where we were at. Some people, let's just say they have the same exact same model as me, but objective wise, they're shooting for a previous day low. In this model, we did take out previous day low, but every single time is not gonna happen. Like, this isn't gonna occur every single time. But yeah, what I'm trying to get at is understand objective. There's every single time frame has a certain objective, and I was trading alongside the hourly objective, 30-minute objective, and the 15-minute objective. Once those time frames were aligned with each other, I was able to take this trade. And it's been 20 minutes already. Okay, so let's try to wrap this up. I do want to go over one little small trade with you guys. It's not really a trade that I took, but it was one mishap that I did have. So basically in this trade here that I was taking a look at, I was actually trying to target this hourly, 30-minute, and 15-minute low. I was treating this 15-minute fair value gap here as a breakaway gap because I didn't want to see prices open, retrace all the way back inside this 15-minute fair value gap, and then take out the 15-minute, the 30-minute, and 1 hour low. I wanted to see us treat this 15-minute fair value gap as a breakaway gap, and then take out that. I wanted to see us take out the 15-minute low first before retracing. So that was kind of like some of the confluences for my trade. My entry pattern here was actually based off of a 3-minute fair value gap. So I was trying to enter this trade based off of the 3-minute fair value gap, and that was what I messed up on. Higher time frame holds higher power. I should have entered this trade based off of the 5-minute fair value gap because the 5-minute will always take superiority over the 3-minute. But I failed to recognize that, and it's just something that I do want to share with you guys. And it helps me as well because it kind of keeps me in check. But yeah, that's going to wrap it up for today's trades. Thank you guys so much for staying. And until next time, peace out. Bam.